wasn't able to sustain himself. And I think it's because he was just pushing too hard. And if I was being honest with you, I think he was just trying to impress me. So don't try to do that. Don't try to do that at all. Because if you make a modest return each month consistently, you'll stay on the leaderboard and you might even win. 200%, 300%, I think would keep you on the leaderboard the entire year. And that's easy to do. But the problem is you get excited and you want to do more. And you look at those other stats. If someone does 1,300 and I think 1,350, 1,350%, you would be the second highest person in the history of that competition. And 1,350% is doable. It's very easy to do that if you are diligent about managing your risk going forward. Don't try to trade every day. Don't try to push it every single day. Look for the low-hanging fruit. And this goes for anyone, not just the competition folks that are out there getting ready for battle. I'm going to do this. I'm going to show the world. You don't have to defend me. I'm ready to defend myself. But for those that are out there trying to do that or wanting to do that, just slow your roll. Just try to do what it is that makes comfortable sense to you. Don't try to stretch yourself beyond your means. Okay. You've never really been in an area where running up in an account real fast, you have no idea what that feels like. And it will change your way of following your model because you'll think that you're doing way better than you really should be thinking. In other words, you'll take bigger risks, you'll trade more frequently just to outpace what you've already done. And that's the mistake that everybody in that competition and every other competition makes. They keep trying to tweak it a little bit more, twist a little bit more. I'm not satisfied with this. Let me go a little bit more. If you have a winning day, stop there. There's been so many people in that competition. I watch it every single day. I love watching the fluctuations of individuals going up and down, up and down. And you can see that they're taking enormous risks, enormous, and they're not really giving themselves the proper chance to win. And I've watched guys last year do incredible run-ups in equity. And I've literally said, look, if this person could stop right now, they're number two. And that's the second highest person. When I say number two, not number two in the ranking on Robin's Cup, but they're number two next to Larry Williams' highest return. Now, it wouldn't be even close to it, obviously, but still, they were there. All they had to do was stop, but they weren't satisfied. That's the problem with competitions. You end up becoming addicted to beating your imagination. What could you have done if you would have held on that last trade, or if you would have taken this many more contracts or this many more lots? And that is the problem with competitions, because you lose sight of what you're trying to do. You get drunk with the bloodlust of trying to vanquish everyone else, and you lose sight of just doing enough to win. That's all you got to do, just do enough to win. Anybody that goes into that competition, anyone, I have the utmost respect for. I've always said this because that's a very, very hard competition. Because once you appear on the leaderboard, your ass better stay there. Because otherwise, everyone watched you fall off. Flash in a pan, one-hit wonders, making it to number 5 spots and falling off the very next day with someone with a lower percentage rate. That's not all that impressive. But someone that can climb up consistently, even if it's small incremental gains. I mean, that's, in my book, that is respectful. That's respectable, rather. I have the utmost respect for that because, number one, everybody can see you. There is no safety net out there. Multiple accounts can't save you. One account gets on that leaderboard. One. That's it. And it better stay there. And that's what happens when people finally get to that leaderboard, and it's 5 spots. And those returns are not even that big. But they end up chasing the people around them on that leaderboard. Or if someone's starting to climb up, let me make sure I gain some more distance between them and I. Don't do that. If you literally look at what they have done over the years in that history of that competition, they haven't had a lot of big run-ups. It's a couple 100%. That's it. And you can do that with 12% a month. 12% a month is easy, folks. It's really, really easy. What makes it difficult is you're not satisfied. When you get what it is that you require for the week, you just want to do it again because, you know, it doesn't feel like you're being productive. It feels like you're not doing the things that a trader should do, when in fact, that's exactly what a trader does. A trader looks for opportunities that are so overwhelmingly in their favor, not just taking every potential setup and saying, well, I win more on average. That's to me foolish. You want to be able to keep things in line with what's the highest probability for you to have a favorable outcome. Meaning, why should you, even though you've seen me and maybe other traders too, buy and sell on the same day? Why should you, as a developing student, try to do that? Focus on where is the largest magnitude, higher or lower in price. Is that daily range going to expand higher or lower? If it's going to be expanding higher, focus just on buys. There's no reason for you to be in there trying to impress yourself or me. And I see you guys doing it. You're posting stuff saying, hey, look, this is what I did. Sometimes there's days where I know that you got lucky there. And I'm not going to high five that. When it's a one-sided day and individuals have worked at one side only, I usually like or heart those posts because you're doing what it is I've taught you. Every single one of you, even in my mentorship groups from even 2016, none of them should be expecting themselves to be able to go up and down all day long in the same market, buying and selling. I don't think that they should have that expectation of themselves. That takes a high degree of focus, experience, and frankly, it's not easy to do that. It took a long time for me to do that because sometimes I would get in there and I'd be right, but I'd hold on to it too long and it would come back and stop me out and it'd be a losing trade. Or I'd go in, I'd have a winning trade, I'd add more, and then leave the stop lower than moving it up. And wherever the original stop was, I'd leave it there. And then by building in a bigger position, now I take a larger hit than I initially would have if I just would have put one position on. Over time, I learned how to do less of that on the wrong side. And my bigger positions would be in favor of the direction of the candle on the daily chart. In other words, if it's more likely to go higher or not necessarily close higher, but expand, the biggest move of the day would be seeing more movement to the upside from the opening. Then buying in those types of days, majority of my risk will be on that. Now, if I see a London close or a late afternoon, if it's an equities trade, I might trade back inside the range. Or maybe it's a lunchtime fade that comes back for the stops or whatever. Then that's going to be a lot less risk or allocated risk to that type of trade because it'd be going against the daily expansion. That I would be favoring more risk behind that type of trade versus something that would be counter trend. Think of it like that. Like if we could look at it as a daily range expanding higher, that would be a buy model for the daily interval. So if that is the case, I'm not willing to take a very large position or a pyramid going short in those type of days. Whereas I will go long in pyramid long if there's a classic buy model or the expansion of the daily candle is expected in my analysis to go higher. And that would be in concert with what the expectation would be on a weekly candle. So core content this year has, in my opinion, offered a whole lot of distraction from that model. But I'm going to take you back to that 2022 model. You do not need anything else but that. Now, I gave you my mentorship, private mentorship, core content lessons, the same lessons, the very same videos that each month the subscribers to that community, they received each month. That was not mentorship. That was them learning the language. That way, when I'm sitting with them over the charts, that's why some of you still hear me talking in the videos. Well, what's consequent encroachment? And why is he talking about this? And what's he talking? You're not a charter member. You weren't mentored by me. My students know that. Okay. But because there's a lot of people that have abused my exclusivity by having that community, which is being shut down in 2023, it will not exist at all. It will be 100% public. I'm going to finish up with them, answer their questions, satisfy their interest in knowing what it is that they've been taught, and then I am 100% public. I will never create another exclusive community because it's been abused. If I ever put myself in a situation like that, individuals are going to simply take what I'm doing, knowing that there's more people outside the community than they are in it, and they can pretend that they